See, I got it right.
Hey, Paul. Thank you, sir.
It's a pleasure.
Appreciate it. Thank you. Good afternoon. Thank you, Paul. I appreciate the kind introduction, and to CUNA for inviting me to speak today. The lights are a little bit different than last year. I can actually see the audience. This is fantastic, because last year I could see the first 3 rows, and I thought this was like around the dinner table conversation. This afternoon, and not so much so. I welcome the opportunity to share with you some of my thoughts on regulatory relief for the credit union community. Regrettably, the day-to-day regulatory burdens of the credit union community appear unprecedented and steadily growing. Now, this is ironic because it cannot be lost on the credit union community that you were neither the perpetrator nor the aider and the abettor of the recent financial crisis. In fact, given the significant settlement recoveries and lawsuit collections received with respect to the reorganization of the corporate credit unions, it appears that the community was to a material extent a victim of those who packaged and sold dubiously underwritten mortgage-backed securities to the corporate credit unions. It's a different way of looking at it. If this was not the case, and I ask you, why would these large financial institutions open their checkbooks and write well over $1 billion? Why? Because the securities were inappropriately underwritten. Although credit unions were certainly not without a measure of meaningful culpability, how odd it seems that the NCUA has continued to pummel a financial services community that stayed on message and continued to serve and operate substantially unimpaired while extending consumer and small business credit to the middle class, the underserved, and the unserved during the darkest days of the financial crisis. The dilemma, however, is that the NCUA is both the source of your regulatory burden and any offsetting regulatory relief. Additional regulatory relief, that is in full proportion to the regulatory burden you carry and the actual risk presented by the credit union community to the Share Insurance Fund and the taxpayers, is essential to avoid a perpetual drag on the operations of the credit union community. Only you can say for certain what you need in terms of regulatory relief. But please allow me to highlight a few issues that may serve as a basis for a more comprehensive approach to regulatory relief that, in my view, will not impair the safety and soundness of the Share Insurance Fund. Although I did not originate all of these ideas, I wish to identify 21 thoughts and combine others to achieve a broad-based proposal of regulatory relief as it relates to the NCUA. So here we go. Number 1, we must remember that it is 2016 and not 2008. And it is counterproductive to refight the last battle, that is the financial crisis battles of 2008, 2009. Instead, we should engage in forward thinking to address new challenges and threats to the Share Insurance Fund and the credit union community. This approach should include corporate as well as natural person credit unions. Number 2, absent documented significant systemic supervisory problems, the NCUA should declare a moratorium on the issuance of any new material rules that limit credit unions' activities or impose new restrictions system-wide, at least for a reasonable period of time, as we assess the totality of the credit union's regulatory burdens. In my view, as long as the credit union system continues to perform well, as it is today, the NCUA should, to the greatest extent possible, deal with individual problem issues through the supervisory process and, except as noted, not by imposing new requirements on the remainder of the credit union community. That said, and this is of critical importance, the agency should remain vigilant regarding unanticipated, contrarian, black swan threats to the Share Insurance Fund and not hesitate to act in a professional and unequivocal manner to address any such threats. And of course, any such threats and any such actions must fall within the letter and the spirit of the Federal Credit Union Act. Number 3, the NCUA should utilize the moratorium period to scrutinize all of its rules, policies, and guidance and remove or improve those that are out of date. Going forward, the agency should undertake to issue new rules on a targeted basis after thoughtfully considering the actual risk presented by the credit union community to the safety and soundness of the Share Insurance Fund and the community itself. Number 4, and this one is near and dear to me as a lawyer. The NCUA should respect the due process rights of the credit union community by implementing an examination appeals process pursuant to which each party is represented by counsel before an impartial tribunal. The agency's examination process should allow credit unions to challenge examiner findings and directions in an open and fully accountable manner without fear of retaliation or retribution. Number 5, the NCUA should establish a credit union advisory group charged with making, in a transparent manner that follows objective governance and reporting standards, recommendations regarding the removal or modification of outdated rules. The NCUA should also engage more with the credit union system and learn from the community itself regarding matters such as fraud prevention, supplemental capital, the regulatory and economic challenges of small credit unions, and a fair-minded appeals process. Number 6, the NCUA should conduct on-site examinations as infrequently as prudently possible. For example, every 18 months for certain well-capitalized and well-managed credit unions. The agency should also respect the dual charter system and rely on examinations conducted by state supervisory authorities to the extent it is reasonable to do so. Further, the NCUA should respect the ability of state supervisory authorities to contribute to the regulation of federally insured state-chartered credit unions in a meaningful and competent manner. Regulatory wisdom does not reside exclusively at 1775 Duke Street in Alexandria, Virginia, but should emanate from a collaborative, good faith efforts between the federal and state regulators. Number 7, the NCUA should ensure that examiners conduct their operations in a manifest and accountable manner, avoiding the because I say so mentality that seldom works even with 2-year-olds. Number 8, the NCUA should disclose in writing to credit unions the legal, financial, accounting, and regulatory basis of their examination findings and actions. Likewise, examiners should rely to the least extent possible on best practices justifications for their actions unless they are clearly supported by statute and regulation and are communicated in an objective and transparent manner to the credit union community on a timely basis. Number 9, the NCUA should expand its hotline to the NCUA Inspector General so credit unions may specifically report on an anonymous basis instances of intimidation, retaliation, retribution, and inappropriate behavior by examiners, other employees, or independent contractors of the NCUA. Number 10, while as previously noted, the NCUA should hold off on new credit union limitations, the agency should publish market-based rules permitting credit unions to access supplemental capital for risk-based capital purposes, because the NCUA should encourage credit unions to maintain and grow their capital. Number 11. The NCUA should respect the business models and plans of credit unions except where they fall objectively out of bounds. Number 12, the NCUA should not meddle in the day-to-day operations and internal affairs of credit unions except as required to address a viable threat. Number 13, the NCUA should modernize many of the restrictive rules that are oppressing the growth and development of the corporate credit union system today. As noted, the agency should acknowledge that what was appropriate in 2008 and 2009 should not burden a reorganized corporate credit union system in 2016. After all, what may have reasonably registered to many as gross mismanagement by the corporates a few years ago appears at least somewhat less so today after the stunning inflow of settlement and lawsuit recoveries on the sketchy investment securities sold to the corporate credit unions. Number 14, the NCUA should work to preserve minority and women-owned credit unions because it's the right thing to do, and because these institutions often provide financial services to the underserved and the unserved at competitive rates so as to address the troublesome issue of income inequality. Number 15, the NCUA should disclose in a transparent manner the ongoing resolution of the administrative actions taken by the agency during the corporate crisis, the proceeds received from the settlement or other resolution of the corporate crisis-related lawsuits, including the amount of legal fees and other expenses paid, and the ongoing changes to the fair market value of the assets securing the agency's guaranteed note program. Number 16, the NCUA should disclose in a transparent manner the stress test methodology the agency relies upon, particularly when the methodology is challenged by credit unions in their internal and third-party analysis. It is inappropriate to inform a credit union that it is deficient under some metric without also addressing in an open manner credit union's analysis to the contrary. Number 17, there are issues of fraud that plague a limited number of credit unions, and the NCUA should immediately redouble its efforts to address this problematic and thorny issue. It is distressing that over 40% of the losses to the Share Insurance Fund are attributable to fraudulent activity within credit unions. Number 18, if necessary and appropriate, the NCUA should work with the FDIC and the Comptroller of the Currency to thoughtfully minimize any ill-considered and adverse impact of the FASB's efforts to change reporting of possible credit losses at credit unions and community banks under the CECL proposal. Number 19, I encourage credit unions promptly to work in good faith to develop and implement consumer-driven principles that guide programs such as overdraft protection, student lending, debt collection, and similar issues. Number 20, Absent economic and regulatory circumstances the NCUA cannot handle within its current operating budget, the agency should use its best efforts to decrease, or at a minimum, materially reduce the rate of growth in future operating budgets. And lastly, number 21. While the NCUA should without hesitation address cybersecurity threats within the credit union community, the agency should not use cybersecurity issues as a justification in support of a request for broad-based vendor authority or the issuances of new rules in non-cybersecurity areas. Thoughtfully targeted, designed and implemented vendor authority in the cybersecurity area, however, appears reasonable and prudent. But again, thoughtfully targeted, designed, and implemented. So, it is relatively easy to develop the ideal or the concept of regulatory relief, as the burdens on the credit union community appear quite obvious from my perspective. The challenging part is to achieve the implementation of actual regulatory relief in the near to intermediate term. Most of what I am suggesting will not require any new law. Yet, without insistence from Congress, I fear business as usual will continue at the NCUA and more rules will follow. In your meetings with members of Congress, consider raising these points and urge your senators and representatives to offer their support. As I have noted during my speaking engagements throughout the country, in an age of burgeoning income inequality, credit unions have a compelling story to tell. Tell Congress, tell other members in the financial services community, and to tell the taxpayers. Remarkably, credit unions have developed business models and plans that specifically target their members, through which they serve the middle class, the underserved, and the unserved, without motivation from the Community Reinvestment Act, and in most instances, while earning income in a safe and sound manner. I encourage you, you deserve applause for that. That's your doing, not my doing. I encourage you to continue your efforts and tell this story on Capitol Hill. As an aside, I do not believe this story is being adequately communicated. You take it for granted. This is what you do. This is what you do every morning when you get up and go to your credit union. You don't think about it. You've been doing it so long. Members of Congress don't necessarily understand this. Some do. Most are overwhelmed with the too-big-to-fail for-profit financial institutions to understand that there are people out there who run competent businesses day in, day out, earning income, but under models and plans that specifically target people of the middle class, those hoping to join the middle class someday, keeping them away from other lenders that may charge confiscatory rates of interest and fees. You do it. Tell the story. If there is a reason, an ability to distinguish what you do from what other financial institutions do, to me, that's it. Something to be proud of. Please allow me to conclude with this. You may have read that the President has announced his intention to nominate me for another federal post. I'm honored by that. You may also be aware that the Senate directs the process and will make the final decision regarding my confirmation, a process that usually takes time, perhaps a substantial period of time. Throughout my tenure at the NCUA, I will continue to advocate for regulatory relief in the agency's proper approach to the supervision of the credit union community. Regulatory relief is not merely useful. It is among the most fundamentally important concerns facing the credit union community today. I welcome your efforts to assist the community either along the lines I've addressed today or in another manner that you and your colleagues consider appropriate. Since coming to the NCUA, I've met many wonderful credit union people and have learned to appreciate the outstanding service credit unions provide to their members and their communities and to our nation. I wish you the very best. You deserve it as the heroes of the credit union community. And as I remarked last year, may the credit union community live long and prosper. Thank you.